could Bitcoin serve the three roles of money? And the second part of the paper was, what is this? What's the technology here? And so I have, I admire art so much. No economist, I think, is better than art. And I said, okay, I want to put this paper to the test. Let me show it to Art. And so we did that. And Art, there were two things that happened. He said, okay, there are two parts to this paper. One is technology. I won't have anything to do with that. So split it into two. So we did. And then the other one was on economics and a global monetary system. And I remember after he got through, helping us think it through a bit, he said, this is what I've been waiting for since they closed the gold window in 1971. And I said, wow, this is a big idea. Do you remember this?
Yes, I do.
This is a big idea. How big could this be, Art? And you said, now this was when Bitcoin was at a $6 billion, we used to call it network value. I guess that more people now call it market cap, $6 billion back then. How big could this be? Well, how big is the US monetary base?
Over the years, Bitcoin has been challenging traditional financial institutions and has the potential to transform payment systems, lending practices, and investment strategies. This raises an important question. Could Bitcoin take on the roles of money and ultimately replace it? In a recent interview with ARK CEO Cathie Wood, she offers her insightful perspective on the current state of the Bitcoin ecosystem, monetary policy, and its connection to supply-side economics. She also discusses Bitcoin's positioning as a form of private money on the global stage. Be sure to watch until the end of the video to hear Cathie Wood elaborate on these crucial points.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Ever since the beginning, we've had this conversation. And I think as I've tried to reconcile what our research suggests is going to happen here, after all, we are saying that we believe the price of Bitcoin will scale. I think to our bull case is $1.5 million. Let's go. As we move toward the system that you are talking about, Art, and already we are seeing the volatility is coming down. When it was $6 billion in network value or market cap, the volatility was like unbelievable. But we're seeing the volatility come down, and the world you're talking about is how far out do you think? We think that price target is a 2030 price target. And how will the conversation change? Because, I know that one thing the core developers will not do is change that 21 million unit. One of the things that we discussed as you were reminding me of this history, my perception, again, just looking at charts going way back, was that the world you're describing, the world of private money, was a very volatile world. The output whipped around pretty dramatically. And I remember one of your answers was, and it resonated, was that yes, that's true, but if there were many crises, they were over in a few weeks. The adjustments were quick. With our monetary system, we get an 0809, and that built up over years and years and years, right? One of the things that, of course, President Trump is animated about is trade, and exactly the issue. And I know you do compare notes and everything. What is he doing? He must agree with you. He's a good businessman. What is he doing when he rants and raves about our trade deficit? I think Larry Fink's conversion was very important. That was a moment. Remember, he was denigrating Bitcoin for years. Very focused on the environmental side of it. But how is it perceived? Well, the first thing that happened was Grayscale, because it kept its fee at 2%, donated a lot of share to all of us. right? I mean,
why was that? That just doesn't make any sense.
well,
Why
let's
they
just
kept
put
it
it
like
this way. We think it was a miscalculation, and the CEO, who I've known him for a very long time, he quit. I think, and now they're putting, if you look at what they did with Ether, they've introduced not only the conversion into the Grayscale trust into an Ethereum ETF, but also an Ether mini for 10% of it. So the cost there is 15 basis points. And I think I don't know if they're keeping it at the rest at 2%. I don't know. I don't understand the strategy. But first donated a lot of share, grew the market in terms of, beyond what Grayscale offered. So the education of 11 ETF providers vying for business at the same time, the education around that was tremendous. And you had most of the major asset management institutions involved, whereas, when we were in our early days, they thought we were using a marketing gimmick, or there was, always a reason not to consider what we believed was a new asset class. So first, donation of share to lots of other players, all of whom have educated. But the most interesting thing is it really has not hit yet, because the big platform, we call them wirehouses. So Morgan Stanley, Wells Fargo, Bank of America, Merrill Lynch, LPL would be an independent one, UBS, none has approved them for the platform. And everybody. Is
that the 6-month mark I keep hearing that they needed some?
I don't know what, yes, that we were told by the most progressive of all of them, we need 3 to 6 months. Okay, so now we're 6 months in. And I'm sure at one point, price hit 70. They thought, we can't put, this is very volatile. We can't put our clients in this. We'll wait for a correction. The correction was much more shallow than they expected. There was one immediately after launch. But no one jumped on the recent one, which is interesting. So I think they're still trying to get their arms around it. They probably have to hire analysts to support them, because otherwise it's on the management team's backs. This is their risk. So I think they'll have to get a little bit of an infrastructure going. And we're starting to see that. We're also starting to see some demand pull from clients, which is good. That will get top management to make the investments in the research team to make this happen. So it's a slow process, but, despite what seems to be a wonderful success, it hasn't even begun.
A tweet from Watcher Guru reveals that Ohio Senator N.J. Antoni has introduced a bill to legalize Bitcoin and other cryptocurrency payments for taxes and various government transactions. This legislation would enable Ohio residents to use Bitcoin for their state and local obligations, suggesting that Bitcoin's future as a viable form of money may be closer than we think. Now, let's return to Cathie Wood to hear her insights on the matter.
This is all deepening the liquidity of the market, which is that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for derivatives. They will use, I think, when one goes, though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And you've got, former President Trump, taking donations in crypto. Wow, that was surprising. But saying that he would guarantee the right to self-custody, very big in this community, right? Very, very, very big. Focusing on the miners and saying, yeah, America first. Yeah, we need them here. That's great. That was wonderful. And then, of course, what happened in Congress, the idea that the FIT21, so Financial Innovation Technology of the 21st Century Act, FIT21, got I think 76 or 78 Democratic votes in the House. Nobody expected that on Wall Street. Maybe that was becoming current wisdom, but that was big, I think, in terms of what I just said. The financial markets are waiting for cues to say, okay, it's okay to go. It's okay to go. Once I think financial institutions become comfortable with the liquidity, and they're going to start, and our industry has scaled because of, companies saying, okay, we can structure a portfolio in this way, and here's the return risk profile of this portfolio. And, advisors in particular know what the risk return profile, when they get that kind of information, like providing your I know you've done great. You should be presenting this on how much more productive Bitcoin 2%, Treasury bond 98% would be relative to just bonds over time. And I think that will continue, and they will be onto it. But, and it's important too, because advisors are always thinking about risk, especially given the last 25 years, tech and telecom bust, 08, 09 meltdown, COVID, and so forth. So they're always thinking more about risk than return. And you're presenting them with a very interesting dynamic, which is, as we said, the 2 and 98%. This once we get some of these platforms to approve it, we're going to see all kinds of products like that. When I started in the business, really started in the early 80s in New York, active equity management that's all there was, really. And then we hit the tech and telecom bubble and bust. We hit 08, 09, we hit COVID, and the risk aversion in the markets today. The reason that younger people like our strategies is for the same reason they put up with the volatility, and ours have been extremely volatile, especially lately, is because they know we're doing the research, and they know this is the way the world is going to work. So they will do the right thing, which is, okay, average in, or however they do it. I have found the fortitude of young people has been enhanced by the Bitcoin movement in terms of our strategy. There's no way we should have retained the assets, in the old world that we have, except for the younger people coming in, and people, not just younger, but people who are very interested in the research, how the world is going to work, not how it has worked. We're in the biggest moment of, disruptive innovation in history, with Bitcoin, a prime example. Bitcoin ringing the bell for a new asset class. And what it does, I may not be answering in the way you expect me to, but what it does in terms of the way the financial markets are set up right now, and I agree, they're going to have to change, and they will change. But any fiduciary knows that if you introduce a new asset class into your asset allocation, the correlation of the returns associated with that asset class are going to be low relative to the other assets. So it's important to include it to increase returns per unit of risk. It's that low correlation that lowers the risk of the portfolio in general. So, that's how we've positioned what's going to happen near term. Longer term, I guess, we shall see. I think there are going to be share shifts in terms of this asset class, given the kind of appreciation we expect. We think its share of asset allocation will go up fairly significantly. And we did a study on that as well, using, minimizing volatility, maximizing Sharpe ratio, all the things that traditional financial asset allocators look at. And right now, or in our published piece, we said, you should start out with at least 2.5% to 5. And that is how a new asset class starts. I remember in the 70s, when I was very new to the business, real estate was a new asset class for pension funds. Then in the 80s and 90s, emerging markets became a new asset class because MSCI had basically said, you don't have to take a risk on what this country or that country. Here, we're going to bundle these. So it became actually a new asset class. And here we are at the threshold of yet another new asset class, Bitcoin leading the charge. So I think the ramifications for Bitcoin are going to be quite significant, and it will take share, as will other crypto assets, I think, from traditional financial assets.
When considering whether Bitcoin can effectively serve the functions of money, it's essential to examine its unique characteristics in relation to traditional monetary roles. While Bitcoin provides a decentralized alternative to conventional currencies, its volatility raises questions about its capacity to function as a stable store of value. Additionally, Bitcoin's limited supply may hinder its use as a medium of exchange, particularly in everyday transactions, where price fluctuations can discourage its adoption. However, as adoption grows and innovations like stablecoins are introduced, Bitcoin has the potential to evolve into a more viable form of money, one that can be utilized globally and enhance the existing financial system. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.